What's up, traders? It's Mark Sebastian, your only option. And this is your look at the week that was. Today, I'm going to go through what happened with the S&P 500, the triple Q. We're going to talk about the economic events that took place and where that leaves the volatility index. So let's dig in. So the S&P 500 on Friday closed 51.2779. What I think is really interesting is really we didn't go anywhere this week. On Friday last week we closed 50.73, so we're up maybe 40 points. But look at the actual action we saw this week. On Monday we closed right at the 21-day moving average. Closing 51.16. By Wednesday, we were down at, we were all the way down at 50.18. So a really big sell-off. And then by Friday, we're at 51.2779. So we didn't go anywhere, but we moved a lot. And I mean a lot. And what I think is interesting is, yes, we're over the 21-day moving average, but look at the 50-day. The S&P has failed it once. Now it's failed it twice. Monday is going to be huge for the S&P 500. It needs to crack this 50-day moving average. That is a big deal. Now, the other piece I would point out is I want you to pay attention to where implied volatility is and where 30-day realized volatility is. I'm actually going to add a couple more metrics in. I'm going to add in 10 and 20 because I want you guys to see this. And I'm actually going to get rid of the 90s because I want this to be clear. Look at where implied vol is all the way down here. And then 10-day realized volatility is up near 15, 1460. 20 days is near 14, and even the 30-day is trading above implied. So on a movement to where implied volatility is, you could argue implied is inexpensive right now. All right, let's shift to the triple Q. And what you'll notice is some very similar price action. Look at this. We had a little bit stronger week, but kind of the same story. Look, we gap open in the 21, we tank, and here we are failing the 50-day moving average. Just like the S&P, the Qs are testing this 50-day moving average. Now, one thing I would say is that implied vol in the Qs is not nearly as cheap relative to movement as the S&P. Now, in my pro chat group, I actually did lay out a strangle idea that I think is going to be a huge winner. I'm going to share it with Trading Desk on Monday because I expect that trade to still be there. But I love the trade that I put on today, and I'm planning on adding more on Monday, and that was in SPX. It was a strangle. But there was some method to that madness. All right, now looking at some of the individual equities, Apple had a pretty nice day, closing up at 183.85, good for about a 6% rally. The market was only pricing in about 3.5%. So Apple moved way harder than we were expecting. Another mover, a little more under the radar, was Amgen, which was up almost 12%. Keep an eye on this one. It had a huge gap. And then lastly, Carvana is blowing people up. This stock looks like it might be going to 130. Kind of an interesting one. This one might be on my watch list that I'm going to put out over the weekend. Now, let's shift to VIX because VIX is now at a 1-month low, and the 3-month low is back below 12. But VIX got absolutely pulverized on Friday, and it's been in a pretty aggressive downtrend since really peaking on April 19th. So what this has done is brought futures term structure back to normal. We actually have an over 1 point spread between the May future and the cash. And if you were going to argue one thing, it's that June looks a little cheap. But the way this has died is so good for my UVXY trade. Now, remember, a couple of weeks ago, I said, I'm going to put on this UVXY trade. I'm not going to touch it, and it's going to double. Well, I've been in the trade now for a little over a week. It has not doubled yet, but what I will tell you is that I'm up approximately 25% on it in that period of time. So a really nice move for us. Look at UVXY just dying. It is touching a new all-time low. And that also means UVIX is probably getting very close to reverse splitting. When that happens, I'm going to do a similar trade in UVIX, and I can't wait to trade it. So those are the major pieces I'm watching. Now, one other name that I really like is 3M. It had this nice gap. It's got this island building here. On short term, it looks expensive. But if I go out, let's say 2 years, you can see where this thing used to be. And if I go at all time, it is even here, it's basically just sitting on the COVID low. Prior to that, the last time it had traded below 100 was all the way back in 2013. So there's probably some real upside here in 3M. I think that's a real opportunity. Just real briefly, I'll take a look at gold, which tighter up, which looks like it's kind of pulling back after going parabolic, and the dollar, kind of a similar story. It really softened on Friday. So all of those are pretty bullish. And then the dog is bonds. Bonds had a huge gap open. Here's TLT. The long bond really moved higher. So that if bonds go up, the market is going to rally. Just be aware that is coming your way. All right, everybody. So that is the week that was. We had a great week, great trading week. If you missed Leisha and my presentation that we did on pitchforks, you are missing out. We've got the replay in here. She's giving a special class on trading pitchforks next week. You can register for it, or if you're a member of Option Shopper, it is free. All right, folks. If you're watching me on YouTube, please like and subscribe, and leave me a comment or a question if you have it, and I will make sure to answer it. All right, folks. I hope you have a great weekend. I am Mark Sebastian, your only option. I hope you have a good one.